Well, there could be more market uncertainty this week with tariff negotiations, the release of key inflation data, and a deadline for a government shutdown. Ahead of all of that, we want to bring in Roger Altman. He is the founder and senior chairman of Evercore. And Roger, you've been around to see a lot of discussions about what happens with the economy, where things are headed. How are you feeling right now? If you look at the numbers, the economy still looks pretty good, but there's a lot of talk of the odds of recession rising, not to a base case, but rising nonetheless.
Well, I think that's the big question underlying markets, is growth really going to slow? I think it's a little too soon to judge. I mean, we saw Powell's comment Friday, in quote, in good shape. Yeah. Jobs number was fine, although it's backward looking. And I think there's some tension between the short-term outlook, where tariff and other policy uncertainty may be weighing on the markets and on the economy, and the medium-term outlook, where if the Trump tax cuts go through, and I think they will, and that overall budget goes through, that may provide a boost. So very short term, I think there's some weakness developing. I mean, we all see the first quarter outlook being marked down. By the way, I saw Kevin Hassett's comment, that's on Biden. Not sure about that, but
I called him out on it. I helped, didn't I?
You did, but I think medium term, it's too soon to judge whether this weakness would be enduring or not enduring. Including, we really don't know where tariffs are going. Yeah. I mean, I see a scenario where possibly they don't last that long, and those that do last are very strategic. I mean, tariffs vis-a-vis China are pretty strategic in terms of the overall U.S.-China relationship. And some of the others, I think, are tactical. In other words, interim.
Okay, we have had people who have suggested, though, that this is not like Trump 1.0, that this is a different administration with very different thoughts on some of these things.
Yes.
And that if they are looking for money to make sure they balance the budget, they're going to have to do things like hit their biggest trading partners, and that would include U.S. and Canada and Mexico.
Yeah, but as you guys have been discussing at length, it's butting up against the markets. I mean, we've seen in the last week or two, when tariffs are delayed, markets rally. Mm-hmm. When tariffs go forward, or the talk is they're going forward, markets weaken. Eventually, that's going to take a toll on the thinking of the administration. Mm-hmm. I think it would take a toll on any administration, although I think President Trump's probably more sensitive to that than some of his predecessors.
So you are thinking of this as tariffs that go away for some of those major trading partners.
I just think Canada. It's possible. If we look at so much back and forth over the last just 1 week, how many different decisions came forward?
When you're sitting with CEOs, though, and they're talking about either investments, mergers, IPOs, all sorts of things, what is the language that they're using in the room right now?
Well, let's define our terms. Let's talk about the corporate sector, not Wall Street.
Okay, corporate sector.
Yeah, and secondly, as you guys know so well, there's no single view out there.
Of course.
Right? So it's a tale of two cities. Initially, following the election, there was optimism. The overall Trump bump, tax cuts coming, deregulation, pro-business administration, and markets rising sharply.
Right.
Now I'd say there's some uncertainty that's settling in. After all, business, for obvious reasons, likes predictable policies because they can plan against them.
Okay.
And so at the moment, that's not what the administration is providing. I think that's a fair comment. There's a lot of back and forth. There's a lot of changing of the mind. So there's a...
But do you believe it all? I mean, Kevin Hassett just said, come April 2nd, you're going to know what the plan is forever.
I don't think that's the case.
Roger, you know what I was just thinking?
Just let me give you a clearer answer. So the views in the corporate sector are in transition. Right. They're transitioning from initial strong optimism to some uncertainty. I don't think they're negative. But there's just some uncertainty.
If you had to guess which party was saying we are going to sacrifice near-term stock market action for building out the middle class and bringing jobs back to the center of the country, and not everyone's going to get, we love cheap goods, but we're going to try to rebuild the middle class, which, remember how many times President Biden said we're going to build from the middle class out? This almost sounds like a playbook the rationale is a play. And I see this. If you don't, Democrats are going to have a hard time. What's the new message for Democrats right now? That's a good message. What these tariffs are supposedly going to accomplish. You've let the Republicans steal the whole middle class.
Okay, two-part reaction. Obviously, the Trump proposition is the impact of the tariffs on big exporters to the United States will be so punitive that they will move production
back here
and investment, production, and jobs back here.
Right.
And over a 4-year period, he's going to be president for 4 years.
It's not very long.
Well, no, but over a 4-year period, that's enough time for that to have effect. And if they stick with that.
But if they stick with that, there's going to be probably pain from the stock market in the short point.
Yeah, but that's the point Joe's making. I mean, there is I see short-term pain. It just has to be, because tariffs are a price increase on consumers, which means less consumption, less investment, less jobs. But if that works in the long term, at 4 years, I think is enough time, then it pays off.